Hi, thanks for joining us. This is Carter Malloy. I'm the CEO of AcreTrader. With me here today is Garrett, our COO, to speak about Roberts Island almond investment. That's the topic today. We're going to first do a little brief introduction of ourselves and AcreTrader. Then we'll dig in and talk about almonds and the macro and micro drivers of almonds. And then we will dig into this specific offering as well. And if you got any questions, please always reach out to us. Feel free to call us, email us, chat us anytime. Some disclaimers here, and then I'm going to let Garrett hop in and just give a little overview.
Thanks, Carter. So today, as Carter mentioned, we're going to be talking about Roberts Island almond development. You can see that here. This investment is supported by both top-down and long-term fundamentals, as well as bottom-up property-specific analysis. Carter's going to take you through the property itself, but I'm going to provide the introduction to us and AcreTrader. So here you see us, Carter, our CEO, you just heard speak. While Carter grew up in a farming family, he has had a lifelong career in finance, working both for an investment bank and billion-dollar hedge fund. I'm our CEO, Garrett McClintock. I previously worked for a family of related ag businesses involving 200 million worth of land. And in short, I've spent most of my career at the intersection of finance, agriculture, and technology. So this is a little bit about our board of advisors. In addition to our 20+ employees, we're lucky to have an incredible advisory board. Don is currently the chairman of the London Stock Exchange. Warren is the previous CFO of Amazon.com. John was the head of operations for a multi-billion-dollar transportation company. And Barry is currently the head of the world's largest agricultural research laboratory. So you can see here that farmland is an exceptional asset class. Why would you want to invest in farmland? Well, farmland is a hard asset which historically has appreciated in value and thrown off a favorable dividend. So that's different from stocks, which are valued on future cash flows and price determined by trading, not by the company's underlying assets. Bonds, they're valued on the ability to pay back future debt. And again, the price is somewhat determined by trading. Real estate is similar to land, but all those assets depreciate. And then cash, of course, you do have some returns from savings accounts, but they're low and inflation works against you. So what does this mean for performance? So you can see this on our website. Farmland has essentially put up more consistent returns than things like commercial real estate and the S&P. And if you look at our next slide here, you can't just invest in any type of farm to get these kinds of returns. You need expertise in managing a farm, getting good enough farms to choose from, and once you do, most people can only afford to buy one or two farms. They're not diversified. So here are the two kinds of offerings you'll find offered on our platform. Row crops typically received more of their total return from appreciation and less from cash returns. They also tend to have more stable cash returns over time, while permanent crops typically have received less of their total return from appreciation because the plants in the ground on these properties actually depreciate a little bit. And then those also receive more from cash returns. So these cash returns do fluctuate more with the market of their commodity or of their crop due to the direct operating exposure you have with permanent crops. And here you can see an offering we have live on the website right now that is a row crop farm. So the primary crop on this is actually carrots, and they do well in the land around Holtville, California, where they're grown. In fact, you can see here it's referred to as the carrot capital of the world, and is actually where baby carrots were popularized. Carrots can and have been raised on this farm in the past, even though the most recent crop grown was alfalfa, which is actually used as a feeding livestock. So interestingly, on this property, we have been able to negotiate a purchase price a little bit under $10,000, and comps in the area tend to be between 10 and 14,000 with a bias toward the upside of that range. So Carter, will you take us through this next slide of the investment process?
Absolutely. So Garrett highlighted there our most recent row crop offering. Now I'm going to go through and highlight this permanent crop offering today, the Roberts Island almond development. So first we'll talk about the macro and micro of almonds, and then we will discuss this actual property. So first, in the influencers of almond returns, or really the returns to investors for almond farmland are driven both by macro factors. So there's basically great global growing demand for almonds, as well as some interesting supply consideration to take into account that we believe sets up a favorable supply-demand dynamic for the crop. And then beyond that, for the property specifics, which we'll get into as well, is important to take into account a number of factors here that we listed on the right, as well as a much longer list that we work through internally while doing diligence on these types of deals. So this data here is from the California Almonds Board. It's a pretty awesome organization. They've gone from spending around $10 million a year a few years ago to now $50, $60 million a year plus, basically marketing almonds globally to help drive that demand that we're speaking about here. And here is one report showing demand through 2025, growing at expected to grow at a really attractive rate. There is another one from market.us through 2028, showing that demand growing at 7%. So the last 10 years has kind of been growing 2 to 7% on the supply side, but the demand side is expected to grow 7 to 10%. So as you well know, when you have demand growing faster than supply, prices do tend to go up over time. And in fact, we have seen that. And an important note on the demand side is that exporting is very important for almonds. Trade wars have already pressured almond prices, especially given China is our fourth largest export market for almonds. And given economic and market problems from tariffs, any resolution on those tariffs could actually be a positive from here on almond prices. Maybe said differently is there's already factored in somewhat of a bear market. And so it's exciting to have a potential interesting deal or resolution of trade wars, because that an improvement in the almond economy could provide upside for all involved. The chart on the right is a little bit dated. Prices have softened here more recently, and we'll get into that more in depth here later. I'm excited to discuss that with you. So to further look at supply very quickly here, is important to note that almonds are the extreme majority of them are produced in the US and specifically in California. And that is a fairly unique factor for just about any global commodity crops in that we have really good information and ability to understand the supply side of the equation. Interestingly, in California, there's well over 1 million acres of productive almond trees out there. And it takes 3 to 4 years for the trees to reach maturity, sometimes even 5. So that slower growth in recent plantings does imply the potential for slower supply of mature nut-bearing trees here in the near term. Importantly, also, you look here on the left, and there is a large cohort of plantings that took place in the late 1990s. The useful life on most almond trees is called 20 to 25 years before they begin to deteriorate in their productivity. And so the implication here is that you could actually have some additional supply coming offline to further aid in prices long term. Beyond that, there are also some regulations that do threaten the industry. We're a little bit comforted that next to grapes, almonds are the largest dollar crop produced in California. So it's unlikely that the state just wholesale cripples this very, very important agricultural industry. In fact, incredibly unlikely, seemingly. But there are some regulations to take note of. Primarily, one is what we refer to in the industry as SGMA, and that could accelerate almonds coming out of production in some of the more questionable water areas. And so what you can see on this chart is some of that removal that's taken place. Some of this is just purely coincidental, but in some important almond growing areas, we have seen some almonds removed from production. That is good for almond prices. That's not necessarily good for those threatened areas if you happen to be in one, but it could be a positive for prices. And so, I think again there are plenty of concerns and mitigants to take into account, but near term, the important considerations are we're dealing with a really large 2020 crop of almonds. we are dealing with trade wars, and we're dealing with COVID and supply chain impacts from that ultimately impact the export market for almonds. And so again, we'll dig into pricing a little more later, but those are important things to take note of. So digging into the specific target property here, first is just a quick overview here. The land is located on Roberts Island, that's just outside of Stockton. This is a 156-acre property. It's in an irrigation district that's had the same superior water rights for over 100 years at this point. This is a development, so you will not see any trees on the property currently as they're at the nursery growing up before moving out here onto the land. What you can see at the bottom of this picture is neighboring properties with productive almond trees on them. And this area has seen some growth and popularity for almond plantings here in the last 5 or 10 years. Importantly, in this picture is also next to it is an almond development that we have been working with the sponsor on and raised funds for earlier this year. So again, as mentioned a moment ago, this land is located in Central California, just outside of Stockton. And as you can see here, there's a canal flowing through the left side of the property and another through the right side of the property. To discuss the soils a little bit, this Egbert silty clay loam is known for its uses in irrigated agriculture, commonly found in the basins of river deltas. These clay components provide large particles, and that limits the permeability in the topsoil, keeping the soil moist but not necessarily wet. And as the soil deepens, the sand underneath that basically becomes more porous from the smaller particles and allows for good drainage around 40 inches deep. Importantly, unlike much of California, the issue with this farm isn't necessarily access to water, but instead it's actually getting water off of the farm, and that's actually where the concerns are here. And so in this case, there are planned investments for this capital raise to invest in drainage tile to help mitigate that risk and help further remove water from the property. This data here is from the American Society of Farm Managers and Rural Appraisers, a society we proudly have 2 members of on staff here, with both a farm manager and a rural appraiser. And I think a couple things of note is you'll see that Northern San Joaquin has the highest prices paid when you look at these high prices paid for good, productive, sort of peak maturity, if you will, early in peak maturity almond ranches. And you'll see on the bottom here that this is for this area, the values tend to be around 25,000 to 40,000 per acre. That is a wide range, influenced by a number of things, especially the age of the trees. And so for us, having an early investment of $28,000 per acre up front seems to place us pretty well on that table for comparables. This is a rough overview of the timeline for development. It's not specific at all, but the farmer has a great plan here in place that's been used time and time again for successful almond development. And there's more data on the development plans here in the PPM and associated appendix. Importantly, again, we've talked about water and how Sigma could potentially accelerate almonds coming out of production, which is good for almond prices and potentially bad for some threatened areas. As you will see here, this area is quite literally surrounded by water. And as we zoom in to the plat map here, you can see this is pre-1914 riparian rights. Riparian means that you have rights because you are literally next to the water. And as on this farm in particular, there's 5.3 acre feet of rights every year, which is how much you can draw. And only about 3 out of those 5.3 feet are actually needed. The water table, again, is relatively close below the farm also. Zooming further in, this specific property, this is the surface water that runs through the property in 2 different locations. And again, underneath the property, there's a good amount of water, and so the sponsor is actually putting in additional drainage to get rid of excess water in some years, and that is in pretty stark contrast to a lot of California. So another checkpoint here is yields. This map shows other almond orchards in the area. Red just simply means that it's most recently planted, as there has been a lot of planting activity and movement here, in particular from a private equity fund or 2 over the last 5 or 10 years. Checkpoint number 3 here is the weather looks good. So the chart on the left here shows little or no frost risk to the crops. This is for Stockton nearby. So the area outside of Stockton can be slightly colder, but I think this helps to illustrate the point of weather in this area. And the chart on the right shows those temperature progressions. And importantly are the widest bands there at the 90th percentile on the bottom of the chart. It shows just very little chance of freezing here. Another checkpoint is execution. Crawford Park is a great team with deep real estate and ag investment and ag management expertise. We've known them for over a year. I've worked with them in the past on several almond offerings. And what we really love about working with this team is they're incredibly diligent. They constantly stress it's about the deals that you don't do. And I think to help illustrate that, Mark and Joanna in particular, and Jake as well, have been looking for a development deal for the past year. They've put out a lot of offers, and this one plus the neighboring property are the two that finally floated to the top of that pile. And so it's just really important to us to see that incredible amount of selectivity from sponsors. And they've got $150 million of deal experience. They've produced some great returns for their investors in the past. This info is a little bit dated. I think they've now got $15 or $20 million of ag investments under management. All right, as promised, now we'll dig in a little more on this particular ranch on the financial side of the business. So again, we want to zoom in and talk about almond prices. So a large factor in almond prices is that there is a big 2020 crop in California. And as a result of that, prices are pressured. Farmer owners are netting out decently because they have more volume to sell than they may have expected, but at a lower price. So this current pricing does create some questions that we want to address. So almond prices right now are under pressure again due to this really large 2020 crop, due to trade wars, and due to COVID-19 shipping pressures. Importantly, each of those appear to be somewhat temporary in nature. And I think the regression analysis here shows what we've discussed, which is demand-driven inflation can drive some upside, and potentially material upside, to the sponsor's projections in the model. We do have some sensitivity analyses around, I'm sorry, the sponsors provided sensitivity analyses around almond prices. You are also welcome to and encouraged to get into the financial model for this and also play around with that some. I think it's also, important to note that almonds are an alternate bearing tree, meaning they have alternating harvests, sometimes of larger and smaller crops, as the plant utilizes available nutrients in a given year, and weather conditions present optimal or less optimal growing conditions. Those cycles tend to be in 2 to 4 year intervals, and agronomists have been attempting to forecast them with little luck for decades. But I think what's important is the prices do have obvious cyclicality, but the cycle is progressing upward in nature. So this is an overview of the capitalization of the project. Again, all this is available in the PPM as well as the associated financial model. The upfront project cost is around $4 million. That will grow over time to under $5 million is maximum expected, call it 4.75 or so. And the loan to cost of the deal remains below 50%. There is an opportunity to refi this or even a potential necessity to refi it, though likely opportunity through the life of it as the planting costs grow. And as I'm sure many of you are well aware, there are favorable financing packages available in market today. Though again, the plan is to remain below 50% loan to cost, so presumably lower than that ratio on a loan to value basis or loan to appraisal basis. To discuss fees, and again, all this is spelled out in the PPM and is included in the financial projections. There is a roughly 4% acquisition fee, a stable and set acquisition fee. There's an asset management fee. The sponsor has agreed to forgo half of that in the first 3 years when no distributions are planned to be made. There is an incentive fee to the sponsor, a development fee to account for a lot of the additional development expenses that go in. And then from AcreTrader, we do not charge the investors fees directly. Rather, our fees are paid by the sponsor as a technology fees. So this is a quick overview of the revenue and operating expense buildup. Again, that can be seen in the full financial model. The sponsor used UC Davis area cost projections and used production, peak-ish production, call it, of 2,500 pounds per acre versus area yields that have been seen at 2,600 plus, according to the sponsor and their in-depth on the ground diligence alongside the farmer here. This is simply a sensitivity. And again, this can be seen on the website and in the financial model. This shows up to $3.50 a pound. It's important to note that prices have gone up to as high as $4.50 in the last 10 years. We think it's probably prudent to be a little more reasonable in expectations. And again, in any particular year, the prices can and will move around quite a bit. But I think these are the approach that the sponsor took in trying to bracket the reasonable outcomes. And so again, to sort of zoom out and reiterate, the investment is supported by both top-down long-term fundamentals as well as a bottom-up property-specific analysis. And you can see here all the points we have discussed here today. And lastly, we want to bring up is there are some great process and software improvements we've made on our website here in recent weeks and months. There are new ownership options that make it easier for you to invest with an entity. You can use an individual account or LLC, corporation, trust, self-directed IRA, etc. Investor accreditation windows are improved. You can say goodbye to uploading documents every time you invest. Once you are accredited, you'll be valid for 90 days if accredited by net worth, or for 1 year if accredited by income. We've also simplified the experience of investing here and improved the security and compliance. One important note on that is that if you are investing with an entity account or an existing entity account, you'll need to complete this verification process before your next investment. So if you're planning to invest with an entity today that is not yet verified, please use ACH or wire to fund your investment while the verification takes place. And lastly, as always, please reach out to us with any questions. You can reach out to us via phone, email, chat window on our website, any questions you have to discuss about this offering. And again, please review in detail the financial model and the PPM associated with this offering. And as always, please speak with your financial advisor. And again, to reiterate on the investment process, you can link your bank account and the user profiles. That's pretty easy to do. And make sure to have an accreditation document on hand. That can be an account statement, a W-2, or a letter from a CPA or advisor, or whatever is easiest for you in that process. Again, please do reach out to us and speak with an advisor as well. Thank you for your time today. We look forward to working with you.